We're talking about Groww. So they've delivered strong sequential performance in the second quarter with solid gains across revenue, profitability, and operating metrics. Margins were supported by stronger broking activity. Before we get into that conversation with Harsh Jain, the COO, let me go across to Sharath, who's breaking down the numbers.
Tamanna, the Groww numbers have been good. If you look at the overall operational numbers, there has been a margin beat also on the higher end of the averages coming in. But there is a PAT adjustment also where there is a reversal of management incentives that has boosted the PAT on a year-on-year basis. Will this continue or not? That's a question to be asked for. Operational numbers have been good. Transacting users and the active users, both of them have done well. The market share, as we know, has become much more wider as compared to Zerodha, and the margin trading facility where the company is bullish on in the future, that has also seen a significant jump going ahead. The con-call top takeaways that they include that average order per user has significantly grown, and the low quality users in the FNO, they are slowly coming down. There's a bullishness commentary coming on the commodity segment, and also the derivative segment revenue that can actually come down more to almost 50-odd%. Currently, that's around 80 to 90% contribution. So that's a major statement coming in from the company. And the stock tracker, the IPO price, it's still up 52%, and listing price up 33%. But from its highs, the correction also has come in the counter, and it's down almost 20%. Its high price was at 189 rupees.
Thank you for that, Sharath. All right, Harsh Jain, co-founder and COO of Groww with us. Harsh, great to speak with you. And I'm wondering, what has the experience been like now talking to journalists post your results versus post your IPO?
Yeah, hi, Tamanna. Thanks for having me. It's always a pleasure to speak with you. No, I mean, see, it's been, of course, earlier also we used to tell how we're thinking, what we're building.
Yeah.
And now also we continue saying that now there is more transparency, more numbers out there. So the questions are relatively, more focused. But it's been fun.
So let's start with that. From what you're thinking and what you're building to what you're doing. I would say that's the distinction in how these interviews go. So let me come to that point. This management incentive is about 160 crores, if I'm not mistaken. So,
yeah.
So, okay. Explain to us what this incentive is, why it was reversed, and will it be reinstated? Because that's the reason that you are showing a profit this quarter.
Yeah, so Tamanna, let me explain. So, this adjustment is not happening in these quarters, like the last quarter or even the next Q3. These are actually done in the previous year. So the numbers that we see now, quarter on quarter, are the actual operational numbers without any one-offs or without any adjustments. Last year, what had happened was because we were a US company and we had to move back to India, there were restructuring done. So restructuring that was done on two fronts. One was on the tax that we paid. I think that's why we have shown loss in the previous year because of the taxes 2024. And the second was on the ESOPs, because promoters cannot have ESOPs in India. So the restructuring done towards those two things are the restructuring for the last year. This year are all like no one-offs and very operating data. So the better way, what we tell people, and also we also look for our own progress, is the revenue top line and the EBITDA.
Fine, but to the question of the management incentives, is 160 crores. Is this something that comes back at any point?
No, this was done last year. This is not this.
Okay.
No, nothing. There's nothing of that sort in future. Yeah.
Okay.
Even present, there's nothing. Yeah.
Okay. And it will not come in the future. Okay, I want to just talk a bit about the margins that you've clocked, and margins have seen a healthy growth. Are these sustainable? We're looking at an average of a 59% margin as the new normal for Groww.
So far, yeah, I mean, it's this quarter we've seen that, but see, overall, we operate like a tech company, right? And there are costs are very, almost every cost that we have, 90% of it is a fixed cost. Say cost to grow, cost to serve, cost to operate. All those three things are pretty much fixed. Almost 10 to 12% is a variable cost. So whenever we'll see the growth, which will keep on happening because of the new customers coming in and the new products we launch, the revenue goes up and the cost doesn't go up. So the margin will, I mean, as a tech company, it will always keep on improving.
Okay. Harsh, good morning. Hiral this side. I was just looking at your active clients. We've seen a decline this time around in the second quarter. What has led to the decline? Are you seeing a higher churn, number one? Or is it just, dormant account removals that are happening? And the other part of the question is, what is the trajectory looking like?
Sure. So the drop in active that you see is, I think, one of the exchanges data. It's not the Groww's active users data, which we put it out in the like quarterly also in the MIS, the data that we share, we've been growing from an active users point of view quarter on quarter and continuously. And what we focus on from an active, like the data that is published out there, is from a market share point of view, because the activity that the numbers on the exchanges data is more of a lag data. It's a 1 year active user. The way we see is a 1 quarter active users is what we publish. So there's not much concern I would have there, because we keep on acquiring new customers and the growth has.
Okay, I think we seem to have lost that line.
Yeah.
Okay, we're trying to get Harsh back. Meanwhile, look at the stock price, up about 4%. I mean, the fact is that it's been, this is a rare combination where you have a good listing and then a good set of numbers to bump it up. A few of the things that are important to understand, and I hope we get Harsh back on that line fairly quickly, is one of them is what the November market share outlook looks like. They're looking at, commodities increasing a part of their volumes as well. Hey, Harsh, can you hear us? Harsh, can you hear us? Oh, we seem to be having a bad line this morning.
I hear you now.
Okay, there you are. All right, no, so I just wanted to ask about, you mentioned market share as a metric. I just wanted to ask about what do you see as the November market share so far?
Oh, November is well to know, because market share depends on the rest of the market. We don't have data of rest of the market, right?
No, but I'm sure you track your market share very closely. So your market share guidance continues to be.
Not really market share. Tamna, we track how we are doing, and that's not really input metrics are the ones, how many customers coming in, what activity they're doing. Everything else is an output metrics.
Okay. Harsh, a question I have with you is in terms of the credit business that you're scaling up as well, in terms of a margin trading facility and the loan against security. One, what is the asset quality performance of this book? And what is the run rate target for the net funded book if you have to look at FY26 as a whole?
So our focus is on MTF more than anything else from a lending, but it's not really. It's a kind of capital market product only, and we have been growing. I think the way we look at different products is that we build the product experience on our platform, and then it's left to the adoption of the people who find it relevant for them. So MTF also, the penetration, like the adoption amongst the users today is very small, less than 1%. And even MTF as a book share across the country, like market share, what we speak, is also 1 or 2% only, not significant. So we see that significant growth should come, but when it should come, it's very difficult to say, because it also depends on the market conditions. But overall, we see a long-term MTF will continue growing up from here.
And what about wealth management? I know it's only 3% of your revenues, but the kind of acquisition cost that you've paid for FISDIM, the key milestones when you're looking at integration and the cross-selling that you're looking at when it comes to Groww's affluent user base, what will that look like if I have to look at FY27?
Yeah, so see, again, we don't look at it like a cross-sell. We look at it like if we can make the products which were not available, say for example, portfolio management services, alternate investment products, even advisory, these were not available on Groww for the Groww customers. And significant part of the customers are actually converting into affluent where they have these kind of products needs. So with an acquisition, we get a very, they've spent a lot of time in building the supply, understanding the product, even researching, and also a way to service these HNI customers. So the marrying two things, like there is a need and demand already on the Groww customers, and now we have a supply and a servicing also. So we'll be able to offer these customers. And it's just a beginning, like, this quarter only we consolidate. There's still a lot of work to be done, but we are progressing good there.
Harsh, just in terms of wealth management, and this is something that has been focused on in the conference call as well. What is the outlook and the plan for wealth management? Is there also going to be a further outlay for a customer acquisition, more spends there?
So in the initial phase, more than acquisition, we are looking at servicing and offering our own customers more products. So each product, wealth management, when we say, it's a compound word, but actually when you look at from a customer's lens point of view, it's multiple products. Like if they want an advisory on their investments, or they want portfolio management services, or they want alternate investment, whether it's a private equity, private debt, or even AIFs, right? So each product, offering those products on our platform to these customers is our focus on building the wealth business.
Okay, and another thing that you mentioned, so just one follow-up on the wealth business and then I'll add one on commodities. What is the growth rate of the wealth business that you see going forward? And you also mentioned on your conference call that commodities, you're seeing an uptick there. What is the outlook on the commodities side of the business and more interest coming in on commodities?
Sure. So on the wealth side, it's difficult to put a rate because we've not yet offered to our customers. The integration is still going on. We just finished our acquisition in October 1st. But we are seeing a healthy growth, almost 80-85% growth in the affluent category of our users. And that growth is almost more than twice the growth of the retail customers on our platform. So we're seeing a healthy demand coming in. Now, once the integration is done and the supply is done, then we will be able to share more growth scale-up plan with the wealth products and wealth offerings. On the commodity, yes, we launched commodity pretty much this quarter itself, Q2, right? So we're seeing some good adoption there. Now we'll see how it goes for the next couple of quarters. We're still in the journey of building more products, more features around adoption of the commodity. We'll still have to, I mean, it's too early for me to say how much adoption and what growth we'll get, but we're seeing good numbers. I think this quarter we've already published some. And the next following quarters, we'll also keep on telling the numbers for the commodity separately.
Okay. Harsh, the derivative percentage has come off from the earlier numbers as well, and you did mention that it's the growth in other segments that you're seeing will probably compensate for it. But is it right to say that the cash segment, which is growing faster, will compensate for the loss in the derivative segment? And how, at what level are you seeing derivative segment as a contribution of your revenues, say by the end of FY26?
Yes, so see, in absolute, every part of the product, should keep on growing because the adoption and the new users keep on growing on our platform. And in general, in capital market in India, if the penetration keeps on going, then we will see healthy growth happening on each of these products. But as we launch new products, it obviously diversifies the existing product far more. Say MTF now, it's a small part, but when it scales up, it also contributes to the cash side of the business, and MTF itself as a book business. So that will start contributing healthy portion of the total, and even the commodities will start taking some portion of the total. So each one of these will make derivatives look smaller as a percentage of total. And that's a natural, when we started, we were only mutual fund platform, 100% was mutual fund. Then we launched cash and we had 60% cash today. And then we launched derivative, we had some portion. So it will keep on diversifying across the different products.
Okay. Thank you so much, Harsh, for coming in and speaking to us and answering all of our questions on this quarter. We wish you the best of luck and hope to chat with you next quarter as well.